And this can't go on forever. And, the price we're looking at in the screen right now, $51. That's going to be history pretty soon because, sooner or later, we're just going to run out of supply. And then we're going to see Keith Neumeyer's triple-digit silver price. And it's only a matter of how soon that's allowed to happen and how high it's going to be when it finally does. So, this is pretty standard. I wrote an article about this a year ago, showing that the silver and gold prices once New York opens at 6 o'clock on any particular evening in the Globex trading system, the price rises up until the London Open or until the morning gold fix in London, and then the boys in London and New York, which are all the same, they're all the big U.S.-based bullion banks, take the price down. It goes up in Far East trading and then down in New York. It's been that way since 1970. Well, it's been like the way for over 50 years. And we had another classic example of it today where silver was up like over $2 and gold was up like 70 or something like that. And then at 10:15 this morning in New York, wham, they just absolutely went in there and smashed them lower. And, we've seen this movie before in the past, and, they've been at it now for, more than 2 generations, almost 3 generations now. But it's a situation that, where they're just running out of road. They're just running out of physical metal. And, this price management scheme, which started back, shortly after Nixon took us off the gold exchange standard in 1971, when they started it, they said, okay, we're going to flood the market with paper gold and silver, which is what they've done. But, they figured out how to do it, but now that they've reached the end of the road and where they're running out of, where the demand is eating them alive, not just in silver, but in gold, platinum, and palladium, how do they get out of this thing without driving the price to the moon? And there's no way out. So, they're resorting to these violent price moves, but sooner or later, physical supply, especially in silver, because everybody knows, anybody that's listening to this podcast knows perfectly well we've been in a structural deficit in silver now for 5 years, coming up on 6. And this can't go on forever. And, the price we're looking at in the screen right now, $51. That's going to be history pretty soon because, sooner or later, we're just going to run out of supply. And then we're going to see Keith Neumeyer's triple-digit silver price. And it's only a matter of how soon that's allowed to happen and how high it's going to be when it finally does. So, today's shenanigans here on Wednesday are in preparation for what's coming up on Friday, which is a huge SLV options expiry. And then on Monday, we get the futures expiry in gold and silver on the COMEX. So there's going to be a lot of paper shenanigans going on between now and first day notice for December deliveries, which is next Wednesday. So we're going to see a lot of, I'm disappointed like everybody else isn't seeing this, but, like I said, we've seen this before, and there's nothing we can do about it except sit back and watch and buy the dips if you're so inclined. Well, the paper market has controlled the price for like 50 plus years in the case of gold. And what they're doing, of course, is highly illegal. There isn't a major bullion bank out there, whether it be in Canada, Europe, England, or the United States, hasn't been fined heavily and found guilty of rigging the prices of precious metals. But, they go ahead and do it anyway, regardless of whether they've been fined or not. And there's no penalty. The problem is that the West generally, okay, and I'm talking about principally the U.S. and Britain, they've become so corrupt now. The CFTC is supposed to be watching over this. Terry Duffy over at the CME Group is supposed to be watching over this. The Securities and Exchange Commission, you name it, there isn't a commission out there, or the judicial system. Everything has been so totally corrupted, and they basically just turn a blind eye because they know that the moment they allow gold and silver prices or commodity prices in general to rise to what they should be, then the paper financial system is going to be very close to coming to an end, because then everybody, and it's happening right now. We're looking at gold and silver basically remonetizing themselves. And the problem is that when this thing finally does break and the silver price, the silver supply disappears and demand overtakes it, we're going to see that price anyway. They're just delaying the inevitable, but it's highly illegal. But there's not a thing that, the major powers that be in the government or in the regulatory agency are going to do, because they've all been captured decades ago, and they basically, like I said, turn a blind eye and throw some fines out there, but it still goes on, and all you have to do is look at the charts, gold and silver charts from this morning to see that happening.
That's the next aspect I wanted to zoom in on with your help, and that is what the chart looks like if you look at the overnight action on the international markets versus what it looks like once the New York COMEX opens, because they look completely different. I have a lifetime of watching data charts as a manufacturing engineer, and I would say those are two completely different regimes of behavior of the data set.
Like I said, I wrote an article about this a year ago, and what I'll do is I'll send it to you, and you can include the link to it in the comments below the video so people can take a look at it. What we see is the East trying to establish a free market price, and the West, including all of Europe, of course, Britain and the U.S., saying, no, we're going to set the price here because it's set in the COMEX futures market. But like I said, this has been going on, and the chart pattern is absolutely stark between what happens in overnight trading and what happens in London and New York. But this is the price management scheme, and it's been going on for 50 years. And like you pointed out, that you look at the chart, going back for 50 plus years, it just jumps out at you that this price management scheme of the West versus everybody else has been going on for generations. Well, sure. I mean, you look at the Silver Institute numbers, and for the last 5 years, they've been showing a deficit anywhere between 100 million ounces a year and 200 plus million ounces a year. I think their number for 2025 was around 147 million or 150 million, something like that. Well, if you add up the last 5 years, you're looking at 800 and some million ounces of silver that has come out of above ground inventories, and that's a full year mine production that's been disappeared from above ground stocks. Now, sooner or later, you're going to run out of above ground stocks that people are prepared to sell at the current price. And that showed up in spades in London in October, where they just basically ran out of silver that was available for sale at that price. And of course, we saw the lease rates spike up to heaven knows what price, and the backwardation blow out by well over $2 an ounce. And there were frantic shipments from the COMEX in New York over to London. It came out of not only New York, but it also came out of every other exchange I can think of, including the Shanghai Futures Exchange. And I haven't seen the Swiss numbers for October yet. They should be out sometime in the next week or so, and we'll see how much they contributed to. But basically, they ran into what's called a force majeure situation, where silver was being demanded, but they couldn't supply it, and they had to put these people that wanted it on hold until they could fly it in from New York. So, there's the first foreshock that things are really out of kilter. They were able to fill the supply-demand requirements this time around when London couldn't do it. But what's going to happen the next time this happens, whether it be this month or next month or whatever? I mean, the silver just isn't going to be there to fill it, and sooner or later, the supply, which is only from the mining, it's about 820 million ounces a year. That's going to be the only supply plus recycling out there. So sooner or later, okay, the only stuff that's available will be what's the mining industry and the recycling produce, and that will determine demand, and it's going to drive prices to the moon. It's just a matter of supply and demand. You can only defeat these market forces for so long before they do catch up with you, and we're seeing the signs of that right now. The first thing is what you correctly pointed out at the top of the column, at the top of the interview, is the fact that you see prices rise in the Globex trading system in the Far East, and then get hammered lower in New York. This has been an ongoing recurrence for the last 50 plus years. And of course, the really big thing I'm watching, and everybody else is aware of, is the fact that London ran out of silver. So this means that there's a huge supply-demand imbalance in the market, which will only be corrected by far higher prices. And the thing is that The other thing I keep pointing out to people is the fact that once we do reach a situation where we do run into this brick wall and prices go to, let's say, some fantastic 3-digit number, and I'm not discounting any numbers that have been thrown out there. My number is somewhere between $300 and $500 an ounce. The thing is, even if silver price went to $300 an ounce tomorrow, okay, or by the close of business today, the mine supply wouldn't change one troy ounce. It would still be 820 million ounces this year, 820 million ounces next year, and 820 million ounces the year after that, because there's no new mining production coming on that's worthy of the name. Maybe 2 or 3 mines, which, making, they're going to mine 2 or 3 or 4 million ounces each per year. I mean, it just isn't even going to touch the supply-demand fundamentals. So it doesn't make any difference what the price go to. The supply will remain basically unchanged. But what will change, and this is something that, we've seen signs of in October, and you're sure aware of it, anybody in the retail business was aware of it, whether it be in Canada or the United States or in Singapore or London, is that demand just went absolutely ballistic. And everybody was out of everything. The mints were backed up, and, it was just a phenomenon where everybody was just gasping for breath. And the thing is that the next time it goes, when we see silver at $60, $70, $80, it will be a demand that was impossible to supply. It will not be able to be satiated. You're just going to run out of supply, and the retailers are going to have sold everything they own, and good luck getting any more. Okay, I've been in this for over 25 years, Dunnigan, and I remember going to my local coin store and buying and agonizing over trying to talk them down from $7.25 an ounce down to $7 an ounce, or from $11 an ounce down to $10.75 an ounce, or from $19 down to $18.50. Now we're sitting here at $51, and we're talking U.S. dollars, not Canadian dollars, which is, I don't know, Canadian dollars like almost $75 an ounce right now. So to agonize over every nickel and every dime and every dollar at $51 an ounce, which we're sitting at today, when at some point in the future, whether it be 6 months from now or a year from now or whenever it happens, when you're going to be looking at a silver price of $390 an ounce, does it really matter how you time this, or whether the spot price is this or the premiums is that? It doesn't matter, because I guarantee you, whenever you go to sell, when the silver is some 3-digit number, fantastic 3-digit number, not only will you have no trouble selling it, but I guarantee you'll be able to sell it for a premium, because you'll be the only person. There'll be very few people selling. It'll be all buyers and no sellers, so you'll have no trouble selling. So, I learned after, a quarter of a century of buying this stuff, and I've been buying it for a very long time, that, I look back and say, I remember the most important thing I remember is I was haggling over this 5-ounce round, and I ended up paying $35 Canadian for it. And I thought, gee, I hope I was making a good deal. I still have the coin. As a matter of fact, I have it on my desk. It's one of those things I remind myself that I stew over something for nothing, okay? And people who sit there and look at the screen, well, maybe it'll dip today and maybe it'll smash it tomorrow, whatever. Don't sweat the details, because in 6 months or a year from now, it ain't going to matter. And 25 years ago, I was worrying about it, and I look at it today and say, man, how stupid was I to worry about stuff like this? And I urge everybody out there to forget it. Just buy the stuff and hang on to it. Oh, absolutely. There's no question about it. You'd rather be years early than a day late, because when this thing does fly, it's going to fly very quickly. And like I said, silver bullion stores are no different than going to Costco or any of the major retailers in the U.S. When you need the stuff, everybody's going to be at the front door. I mean, look at the lineups at the Perth Mint in Australia. There was a lineup at the in Singapore, and you name it. There was just lineups everywhere, people buying this stuff. The thing is that I don't have to line up. I'm already set. I've been all in the precious metals for the last 15 years. Every nickel I've got is in gold and silver stocks or in the precious metals itself. So when this thing blows sky high, I'm just going to sit here and relax. I mean, I don't have to worry about scrambling. So my advice to people is, be prepared. Like you said, I was a Boy Scout too. As a matter of fact, I was a Cub and a Scout. So I've been there, done that as well. You have to be prepared in advance, because I guarantee you that the day you come to need it, and if you think that, there's not a lot of stock in Costco, there's even less in the bullion stores. And when they're sold out, it will be gone forever. And I don't care how much money you got. You're not going to be able to buy it because it physically isn't going to be there. So, like a hurricane situation in Florida or southern United States on the coast, lay in your stocks when the prices are down and there's lots of stuff on the shelf, because the day you're going to need it or the 3 days before you're going to need it, it's not going to be there. And if you have it in stock already, you have it in the house, you can just sit back and watch everybody else. The madness of the crowds take over. And as we saw in October, the madness of the crowds was there trying to buy all the silver and gold they could. And most of them came away empty-handed and ended up paying big money for it. So just be prepared in advance, because, like I said, when this thing does fly, it's going to go very, very quickly.